Welcome to my October 2023 update on the best savings accounts here in the UK. I will take you through the highest paying easy access, limited access, fixes, notice, ISAs, all in this video, plus dropping a few little nuggets of news which I think are well worth knowing about. Before we get into all of that, a quick bit of background. You might already have seen my video from a few weeks ago when the Bank of England announced their most recent decision on the base rate. How much higher would it go after all those consecutive increases? Well, you probably know already, surprising everyone, they kept it at the current rate of 5.25%. And that does have an impact on some of the movement that we're going to be seeing in these rates in a moment. And with that, it's worth just showing you, this is something over on becleveryourcash.com that I put together for the roundup. This is the movement between the last video, one of these right at the end of August, September update date at the end of August, and this one now. So it's about 6 weeks between them, a bit longer than normal. But anyway, you'll see here the movement between the best buys in that time. And you'll see in the easy access and limited access area, you'll see there has been some improvement. They have been going up. They've been increasing to keep going up and up and up, which is great. And I'll share those best ones with you. Similarly, notice accounts, they've also got higher. Talking about that 3-month, 4-month, 6-month notice accounts. But when we go down to the fixes, you'll see that broadly they are starting to fall. Over the last 6 weeks, the best buys have been behind us, apart from on that shorter 6-month fix. So again, I'll go into more details on that. And similarly, when we look at ISAs there quickly, it's repeated. Easy access improvements, quite a big improvement there, 0.5 percentage point, whereas the 1-year fix is an outlier improving, but the rest all starting to fall down. So that is kind of where we are right now with savings in October. They are short term, have been going up, and that might continue. You never know, depends what the Bank of England do at their next meetings and so on. But broadly speaking, we might be getting to a point now where they're starting to peak, starting to get the top of them, whereas fixes, they almost certainly have peaked, unless of course there is a change in the coming months to what the Bank of England do with those rates. So again, it's all speculation. There's no one knows what's going to happen at all, right? All I can tell you about is where we are right now. And with that, let's talk first of all about regular savers. Now, I did a separate video on this a couple of weeks ago, so hopefully you're already across it. This is a brand new regular saver from Nationwide. So I won't go into a huge amount of detail because you can watch that video, which takes you through it, but it pays a whopping 8%, which is the best you can get on any account out there right now, significantly above inflation, which by the way, right now inflation is 6.7%. So if you can get above 6.7%, which only a handful of accounts will do, then you are getting more than inflation, which is really vital in so many ways, but unavoidable with most accounts that you can't do that. But anyway, that's good news. This 8% regular saver from Nationwide, you do need a current account with the bank. To get that, the most you can put in is £200. I've seen a lot of confusion on the comments to that video around regular savers. And although I do explain it each time I talk about them briefly or direct you to the other video I've got on regular savers, I probably will do another update shortly because some people think 8%, that's fantastic. I'm going to get 8%. If I put £200 in every single month, that's £2,400 over a year. I'll get 8% on £2,400. It doesn't work like that, because if your money is going in 200 every month, then actually the money you put in month 7, it's only going to be in there for 6 months. So you'll get half of that rate. And over the time, it actually averages out about half of that. So really, you're looking at around 4%-ish on 2,400 for the total amount. But for the time it's in the account, it is getting 8%. So it is better than an account that pays more than 4%. Again, I'll probably do more detail on that because I've got lots to get through in this video. So that is a really good one to look at. Also, if you have a Yorkshire Building Society savings account, you've had one for more than 12 months, then you'll be able to get a loyalty regular saver from them that pays 7%. The most you can put in for here is £500 every single month. And in fact, the summer of 2022 of last year, I did mention it might be a good idea to open up a savings account with them, put a penny in it, put a quid in it, whatever, because they have a history of offering these loyalty regular savers. And I actually did that in August of 2022. So I'm now in a position where maybe this weekend, if I get a moment, I'm going to apply for one of these 7% accounts, as well as that Nationwide one at 8%. Hopefully some of you who listen to that video did something similar and you'll be able to get access. Now, if you haven't, well, maybe if they do another one in a year's time, it might be worth opening up an easy access account now. So if they do have a really high paying regular saver in a year, you can grab that one then. Otherwise, on regular savers, not a huge amount more to share with you. If you don't want to have already be an existing customer or have a current account with a bank to get the top paying regular savers, which most of them do, Coventry Building Society has increased its rate to 5.5%. You can put £500 into there every single month. And I'll quickly just share with you the top regular savers we have right now. That nationwide one I mentioned, First Direct at 7%, available to everyone as long as you have a First Direct current account. And still there's Club Lloyd 6.25%, NatWest and RBS 6.17%. They are still the top ones there. Incidentally, Nationwide, First Direct and Club Lloyd's all have bank switching deals right now. So it's a good opportunity not just to get those regular savers, which are paying, again, the highest rates you can get pretty much anywhere right now. Also some switching cash if you've not had them before. Now we'll move on now to talk about easy access and limited access accounts. A couple of bits of news for you here. First of all, Starling Bank. Now they have started adding a pretty decent rate for in-account interest. Now normally, if you watch my videos regularly or read the stuff I write about, I'll be saying to you things like, don't keep all your money in your current account. You want to move it to a separate account for one or two reasons: to get a better rate of interest, or just to keep them separate because it means you don't accidentally spend your savings. So broadly speaking, I don't think you should be having a huge amount of money in your current account. Okay, if you want a current account that pays high interest, which come and go, then you maybe want it as a separate account, not your main account. However, this 3.25% on the first £5,000 with Starling is really good. Your regular viewers will know Starling is one of my top current accounts anyway. I really like the app. I really like the banking experience. And there's always going to be some money in your current account, maybe days after payday or you're spending cash. So now with Starling, I'm going to be earning an all right rate of interest. It can be beaten elsewhere, yes, but that 3.25% is better than nothing, which I'd get on a current account elsewhere. Or I think, is it 1% you can get with Chase from the back of my mind somewhere? You know, this is a decent one to go for. So if you don't already have Starling, this is another reason to consider it. A quick update as well on Santander Edge Saver. Last month's update video, I told you about a potential hack that I was going to investigate. And this is where if you didn't set up direct debits and pay money into the Edge current account, which is required to get the Edge Saver, you might be able to avoid that £3 monthly fee. I heard back from Santander, from their press office, and they said that the fee for an Edge account is charged once a customer qualifies for the cashback for the first time. If after opening the customer's circumstances change and the account is no longer right for them, or they don't meet the requirements of the terms and conditions, they can, or we may, switch them to a different account. So what they're saying is this shouldn't work. You shouldn't be able to do it. And if you don't activate the account, the current account, then they might move you to a different account. So again, may is not will, but it's something to bear in mind there. The hack, if you do take advantage of it, it might be short-lived. But again, I did mention this in a current account update last month as well, this information. I did ask any of you got experienced this to let me know. No one has let me know yet. So if you have tried it and it's working for you, then that is really good to know. Now, in terms of the actual easy access account, so between the last video and this one, I did do a separate video, actually. You probably saw that. Santander had a 5.2% paying easy access account that came and it went. It disappeared really quickly. But don't worry if you missed out, because Ulster Bank, part of the NatWest group, so if you want a big bank that you can be familiar with, Ulster Bank is part of the big banks. That is now offering 5.2% on balances above £5,000. So that is a really, really good option. Synergy is not far behind that on 5.15%. And there are a number of banks actually now above 5.1 even. I think that should be your benchmark right now for your savings. 5.1, if not maybe 5.5, 5.05%, but really 5.1 should be your benchmark for where you're getting your money. Getting below that, below 5%, I absolutely would consider moving to one of those Best Buy accounts, and we'll look at those in a second. But you can actually beat 5.2% if you go for a limited access account. And this is by Chorley Building Society. They'll only let you take your money out of the account once in a year. So it's not going to be for all of you, but that will pay 5.3%. There are others, limited access accounts as well. Coventry Building Society 5.2%, Virgin 5.12% if you want to go with a name you're familiar with. But again, they do have limitations on how much you can take the cash out of there. What I would say is if you're interested as well about, I always get this with these videos, I always get comments, what about Atom? What about Zopa? What about Chip? What about all these different places? If I'm not talking about it in this video, it's because at the time of recording this, the rate they offer is not one of the Best Buy tables. As ever, a reminder, head to becleverwithyourcash.com/savings, where myself and the team, every day, 2 or 3 times a day, we're updating the best rates across all the things we're speaking about right now. So you can head over there to see what's going on. But incidentally, yeah, if you have got Chip, Zopa, Crew, Chase, even the Barclays Blue Reward Saver, it might be time to ditch them because they have not changed their rates. They're all paying rates that can be beaten. So let's have a quick look, shall we? This is the current account savers we spoke about. The Edge saver here at the top, that is the only one that I really would be looking at right now. You do have to have the Edge current account. There is that £3 fee every single month, and it's only for a year. Again, a whole video taking you through that, but that is the only one that is significantly better than what you'll get in the other easy access accounts. I would be looking probably to take your money out of the Barclays Blue Rewards right now, and I wouldn't bother with that Flex Direct or Crew right now, but they are the leading ones if you do want to keep things all together quite easily. Limited access, as I mentioned there, Chorley 5.3, Coventry Building Society 5.2%. And here are those picks of the easy access accounts. These are the ones you get your money in and out at any time you want with relatively large caps on how much you can save in them. Obviously, you shouldn't really have more than £85,000 in any savings account anyway. So Ulster at 5.2, Synergy mentioned that as well. Just below that, Kahoot, which is part of Santander, 5.12%. So if you already have the Santander saver from a few weeks ago, and that's maxed out with your 85k. I know we're not talking to many of us right now in this situation, then you obviously wouldn't want to have the Kahoot one as well because they would share that financial services compensation scheme protection. But you see, Beehive Money, Secure Trust Bank at 5.1%. In fact, Beehive Money is part of the Nottingham Building Society. So if you want to have a slightly more ethical place for your cash, that's not a bad shout, although it does have quite a large bonus for a year. So it would drop after a year. Or Family Building Society, a little bit of a gap there because there are accounts available between that. But again, Pure Building Society, 5.04%. That is a decent option for you. Incidentally, just quickly touch on notice accounts here. Here are the best ones for those right now. 3 months, 5.6% from RCI. 4 months from Stafford Building Society, Railway Building Society, 5.75%. And 6 months with Oxbury Bank, 5.59%. Again, all of these and more options, if for some reason these don't work for you, and any changes that might happen between this and the next video, be clever with yourcash.com/savings. So what we're going to talk about next. Next, we're going to talk about fixes. Now, the last video I did, again, 5-6 weeks ago, I told you about the NSNI Guaranteed Growth Income Bond paying 6.2% fixed for 1 year. And we knew at the time this was going to be a limited availability. And sadly, it has gone. It went last Friday. It was pulled for new customers. So sadly, if you didn't get it, you have missed out. But you had plenty of time to get it if it was for you. So hopefully you did get your hands on it. Now, at the time when this was released, what it did is it kind of reversed a decline that I've been seeing over the preceding sort of month or so, where the fixes were starting to drop down. People who've been paying above 6% were starting to do 5.95, 5.9, 5.85%, 1 years, but also on some of the longer fixes as well. And that is happening again since last Friday when NSNI pulled that deal. The banks who were offering more than 6%, and it wasn't a huge amount more, maybe it was just 6 or 6.05%, on a 1 year fix, are starting to reduce their rate. And in fact, when I started writing my article that I did before I did this video, Synergy was paying 6%. And when I checked again just before recording this video, Synergy's 1 year fix had dropped down to 5.95%. So again, it's a good example where we have, at least for the time being, absolutely seen the peak on fixed savings, at least fixes above 12 months. Again, caveat, it could change if in 6 months' time or months' time or a year's time, whatever, the Bank of England suddenly goes, we're not doing what we want to do with inflation. We need to increase rates more again. And longer term predictions are that they will go high again, as we've seen a number of times over the last sort of year and a half, 2 years. Then obviously they could start going up. But I certainly think where we are right now, you know, you want to act really fast if you want to be getting 6 or even close, just below 6%, because it started to drop down. You've got to remember as well with fixes, the banks are factoring in longer term forecasts of where we are. So the predictions are still that we'll stay at relatively high base rates from the Bank of England for a good couple of years, if not longer. That norm could be between 4 and 5%. So it's not like they're suddenly going to drop down to where we were, but it could be they get closer and closer to 5% potentially, gradually sort of falling down there. And we've seen that across fixes and fixed ISAs. So let me quickly show you some of the top picks right now if you are keen to get yourself a fixed rate account. What have we got? So we have got here 6 month fix. Again, Habib Bank Zurich is expected profit rate 5.75%. 9 months Ali United via Raisin 5.79%. And then the 12 month fixes. So again, I'm not sure how much longer this one and a few others that are around that sort of level would be around for. Al Ayan expected return of 6.12%, just below that 6.1% AER. So that is from Ali United as well, again via Raisin. But again, below that they start falling quite below 6% quite dramatically. You still get a 15 month 6% there from, actually that 15 months is wrong there from Synergy. It's someone else out there. So forgive me for that one. It's correct on becleverwithyourcash.com/savings. As I said, it changed just before I started making the video. That all changed. So I didn't get a chance to change it on this slide. As you see down there. And then we get 2-year fix. You can still get 6% from United Trust Bank on 6%, but that I don't think that will last for long. I think we'll see that disappear shortly. And again, the 3, 4, 5-year fix is all with JN Bank. You might not have heard of them. There are a lot of these banks you probably haven't heard of. They're offering better rates on those longer fixes. And I will say this again. I know I say it every time, but I'll say it again. If you are fixing for more than 12 months, just check when the interest is paid. Sometimes you've got a choice, but if it's paid annually, it will be paid in the year, that 12 months time, and then 12 months after that and 12 months after that, and it will count to that year's personal savings allowance. If it is paid at maturity, it will all come at once when the whole thing finishes. So if it is a 2-year fix, you'll get 2 years of interest paid in 1 year, and that could have issues for your personal savings allowance, that tax-free amount that you can earn every single year of interest before you have to pay tax on the earnings above that. So just bear that in mind. And finally, let's quickly talk about ISAs. Let's take you through the picks right now. Again, as I said, improvements on easy accesses and limited access, but generally a decline on the rate you'll get on the fixed ISAs. So right now, very close to 5%. From Shawbrook Bank, 4.93%. Chorley Building Society, again, this is 5% on a limited access. Again, you can only take that money out once in a year. Still got those flexible fixed cash ISAs from Barclays Bank. Talked about them in last month's video, so check that one if you will find out more about those. They're kind of, they're fixed rates and the money's locked away, but you can access some of it. So they're interesting ones. Virgin Money, 5.85%. That is a slight improvement on the 1-year fixed, but the others, the 2, 3, 4, 5-year fixed ISAs, they are all dropping by a decent amount as well compared to where we were 5-6 weeks ago. There has been one other increase, the lifetime ISA from Moneybox, now 4.25% rather than 4%, although that is only for the first year. It will drop down after 12 months. So there you go. Packed in loads as ever in these updates. I hope you do find them useful. Remember, for more rates, more information on the ones we've spoken about, and any updates that happen over the coming weeks, head to becleverwithyourcash.com/savings. My name's Andy Webb. Thank you so much for watching. I'll see you again soon.